Aditya Narain joins us now. Let's take a conversation forward with him to understand what he makes of the market right now. Aditya, the big question is that is the worst of the price action behind us? Because markets will discount the future in advance. Do you think markets are discounting in too much of pessimism?
I think there is so much uh, uncertainty around so many issues at this point in time that I think it's going to be very difficult at any point in time to go out and stridently say that it's discounting all the bad news that could come through. So not that I'm suggesting that the market will necessarily go lower, but I think the uncertainties out there are quite significant. And to that extent, I think it would be a very brave man who said everything is priced in on the potentially on the downside.
What is the issue? Is it interest rates? Is it crude? Is it fear that liquidity is going to wane away the way it is? I'm just trying to understand that what is the big uncertainty which is confusing the market?
I think I think there are two, three levels of uncertainty. I think one which you can put in a particular block, right, is really the whole interest rate paradigm, the inflation paradigm. Whether it is global, whether it is US, whether it is the monetary policy response that you've seen from the US and the response that you've seen from India. I think this in itself, I think creates a lot of uncertainty, as it were, because directionally you could go in many ways, and the pace of that change could be very significant. It's kind of unprecedented that you have inflation at 7.5% as far as the US is concerned, and you have unemployment which is at a low, right? Which effectively calls for very strident rate hikes. You have a situation where India, from a policy perspective, is not mirroring what's happening in the developed markets. That also tends to open up a Pandora's box. One, India could be ahead of the curve, and the rest could fall in line, which is great. On the other hand, India might just have to catch up sharply, which could end up in a significant retrace in the approach. So I think that's one level of uncertainty that you are seeing, which is the more upstated, which is more stated, um, which is more visible, right? I think the second one, which is more critical in terms of the more medium-term direction of the market, is what happens to demand in India. I think the jury is still out. You have segments that are tending to do well, but you have segments that are tending to do very poorly. There is a concern that the middle of the economy is tending to struggle a little bit. And I think that uncertainty from a medium-term perspective is probably more vital than what is the former, which is the rate direction. So I think there are these elements which are making it difficult to really call markets in the near term and to actually make calls like it's priced in or it's not priced in. I think the third element that has come in, which is not uncertainty, which is just probably volatility, is the geopolitical stuff that you are tending to see. So I think that's how one should look at it. And as I said, you might want to distinguish between uncertainty, right, which is the direction and the pace of change, and volatility, which is more of a near-term phenomenon.
As long as you can understand, is a long-term investor's best friend. So if we have to use this classic cliche or market wisdom, it's not mine, it's not yours, it's Buffett. Volatility is investor's best friend. How are you telling your clients to use their best friend, which is Mr. Volatility, to their advantage?
So I think the way to look at it is, and I think it's a very fair comment, right? Particularly if your holding period is medium to long term. I think you just end up picking on stocks, sectors, themes that you think over a 1 to 3 year period are just set up well. And if you get reasonable prices along the way, you actually have the guts and the gumption to go out and make those purchases. So that's the way I would tend to look at it. This does provide opportunity. You do see, if you look around, there are very decent stocks that have corrected anywhere from 20 to 40%. So it does provide you this opportunity. From our portfolio perspective, we do believe there are a couple of themes that are running strong and are running hard, and you should be buying into them, as and when you get a price that you think is suitable. One is the technology space, which has actually corrected quite a bit. We just believe there is a very decent medium-term cycle, which should kind of compel you to grab stocks that you're getting at prices that you like. I think the other is the banking sector setup that we have at this point in time. There is capital, you're seeing some sprinklings of growth, and you have valuations that are generally reasonable. So I think that's how one would play it. I think just set out in terms of themes that you like, stocks that you like, and then you wait for a price which you're most comfortable with. You never always get the bottom or the absolute price that you're looking for. Um, but you should have that framework ready to go and make those purchases.
Good morning. This is Nayantara. So you've told us that banks provide a very good opportunity right now. You've talked about technology, which has come off considerably from the highs. Just want to clarify here, when you say technology here, are you talking about the IT companies like TCS, Infosys, Mindtrees, Tech Mahindras of the world? Or are you talking about the new age companies? Because the last time you were here on the channel 2 weeks ago, you were underweight on those aspirational new age companies.
So very distinctly where the cycle is very strong is the IT services space. I do think, since we met last, a lot of these stocks have come off very sharply. I think it is time to be more opportunistic there. You will fundamentally have a situation where the real value of those will keep varying with external elements. But the fact that you've got such healthy corrections there, I think makes it actually much, much more attractive. Though, as I said, the 3-year theme that you're seeing really lies in the IT services space, where the demand paradigm is great. It is being well valued, but is it being valued adequately or not? I think that's where the opportunity lies, with much less volatility.
And taking forward as far as banks go, what are you betting on? Is it the private sector lenders or the public sector banks?
I think the bulk of our focus will be on the private sector lenders. They dominate the market space in many ways now, not in terms of number of banks, but size, scale, and the position that their balance sheets find themselves in. So yes, I think it will predominantly be the private sector banks, but SBI is also a stock which at an individual level is showing all the same characteristics. We wouldn't go below that in the rest of the PSU space.
Right. Aditya, just wanted to get your perspective on manufacturing as well as the sector. In your recent note, you've talked about as to how it's, for long been the holy grail of India's economic and job creation momentum. But we haven't quite seen that translate into, equity or stock prices.
Yeah, so I think there are two elements to it, right? One is, are you seeing a decent shift in terms of the quality of manufacturing that you're seeing, and in terms of the scale of manufacturing that you're seeing? And I think that's where you're seeing a decided shift from what used to be. We've done this piece that you might be aware of called the new edge that India is showing at this point in time. And manufacturing is something that falls squarely in this, because I think what has tended to happen is that a lot of manufacturing for India has been for scale and largely for the domestic market, and it has been qualitatively competent, right? But none of this has been kind of world class, either in terms of the edge it carries, or the newest technologies that it runs with, or to some extent just the scale efficiencies for a global market rather than a domestic market. And our view is that you're beginning to see a shift there. One, of course, because the economy has evolved, there is capital that is supporting it, but also because you've got into a situation where the government is actually incentivizing this kind of stuff through these PLI schemes, right? So I think there is a qualitative shift in manufacturing that you're tending to see at this point in time. It will also result in a quantitative shift in terms of what you're seeing in absolute scale and in the absolute investment that tends to take place. So I think there is that crossover that is happening, right? From base manufacturing to more sophisticated manufacturing, that is at par with what you're seeing in the rest of the world. And I think that is very, very distinct. It's no longer kind of laggard manufacturing or just making stuff. It is making stuff with an edge, which is competing with the best in the world and will, potentially get scale. So I think that's the difference that you're tending to see. And I think that's a very, very meaningful transition that will tend to play out in the longer term. Now, to your point in terms of whether it is going to necessarily play through in terms of stock prices and upfront, I think there you have to be a little bit more measured. Shifts are seldom captured in stock prices upfront, firstly. Secondly, these are shifts that are longer term. And thirdly, these are not shifts like, say, the technology shift that is, a little bit new age. It's not that. It's building on something that exists, but taking it to the next level. So we do see that transition. We do see, this China plus strategy that is playing through to some sectors, which is giving you upfront a certain amount of momentum. But it will take time, but it is most importantly a kind of a seminal shift that is tending to happen from a qualitative perspective.
The other thing you've talked about in your note is, of course, India's human capital. Now, the obvious correlation is Indian IT services. But outside of that pool, where within the listed universe do you actually see opportunities?
I think business services is the one where you actually get it upfront, right? And it's not necessarily that it's the highest end. It's just that they are qualitatively moving up. And from a business perspective, the ability to put it together and put it out in the market, I think that tends to go up. So I think that's one space where it is coming through. I think the other is really in the design space, where you're actually also seeing a lot of kind of R&D tending to shift into India. It does not come under IT services, as it were. It's a new area. It's an area that's been built on by a couple of businesses. And I think that's where you're going to see a certain scale up, right? And I think the third thing is just a general upskilling of qualitative elements from a global sourcing perspective, whether it is financial back office services that are coming through, whether it is, other support services which are qualitatively of a higher level than in the past. I think that's where you're seeing a little bit of a step up. So it tends to move on to the services space. Now you could sit back and say, we've seen this 8 years ago, 10 years ago with the BPO boom that you had at that point in time. Is it similar or not similar? I think at some level it is similar. It is just that at a qualitative level, it is operating of a slightly higher order. It is more skilled, better priced, and I think more relevant in the overall global economy, right? So I think that's really the way we are looking at it. The IT services obviously is a leading part of it. And I think that is only accelerating and entrenching itself just in the global workforce space.
Right. Aditya, great having you on the show. Thank you so much for taking the time out and speaking with us today.
Great. Thanks so much.